Shares of e.l.f. Beauty getting crushed today, down 14%. That's despite a huge beat on sales last night, a 50% year over year. The company raised its fiscal year guidance, too, but that came up short of the street's estimates. Joining us now in an exclusive interview is e.l.f. Beauty CEO Tarang Amin. Tarang, it's great to have you on Overtime. Thanks for being here. That's exactly where I want to start with you, because 50% growth for fiscal Q1. You did do this beat and raise, but as a number of analysts have pointed out, that raise in the current quarter signals a slower rate of growth than what we just saw in earnings. So walk me through it. Why are we seeing that?
Sure. First of all, thank you for having me. It's a pleasure to be on. I'm really proud of our team. 50% net sales growth, 260 basis points of market share growth. This is our 22nd consecutive quarter of both sales and market share gains. And so I'm really proud of the results of the team. What I tell you on short-term volatility, we don't pay that much attention to it. We've been focused on what really drives our stock over the long term, which is net sales growth and adjusted EBITDA growth. And we have a terrific track record, as I said, 22 consecutive quarters of that. And so if we continue to execute, I'm not worried about any one-day reaction to this stock. I think we've had pretty good performance over the last 5 years, and I'm very confident in our team and what we're able to do.
But do you expect to continue growing at the rate you've been growing in the current quarter and beyond?
Well, we certainly, our approach on guidance, I should mention, is a pretty conservative approach. If you look back over 5.5 years, we usually take a very balanced view, one quarter at a time. For example, last year, I think our initial guidance was something like 22 to 24% growth, and we delivered 71% growth. So there's a certain pattern each company has. Ours is really to take it one quarter at a time. I'm highly confident in terms of the white space we have. We feel we can double our market share in color cosmetics, just as we have over the last few years. We have two of the fastest growing brands in skincare. We're very much in the early days of our international expansion. It's only 16% of our business, but been growing in this last quarter 91%. So I'm highly confident of the growth prospects ahead of us.
And you are taking market share as well, and you sell into Target, you sell into Walmart, a number of other places. How do you continue to grow and expand distribution? And given the fact that you are, I would say, a more affordable brand than some of the other beauty and cosmetics players out there, what does that mean in terms of what you're seeing with consumer behavior?
Sure. So I think, if you look at what the three main drivers of our growth have been, our value proposition, we make the best of beauty accessible to every eye, lip, face, and skin concern. Our powerhouse innovation, a unique ability to take inspiration from our community and the best products in prestige and bring them at extraordinary values. And our disruptive marketing engine. We know how to engage and entertain our community. We're the #1 brand amongst Gen Z, Gen Alpha. We're picking up more millennials and Gen X. So we have a winning formula when it comes to our retail partners. We've been able to continue to drive incredible market share growth within each of them and really help them grow their categories. And so that's the formula we're going to continue to follow.
What's growing the fastest?
Well, the great news for us is everything's growing. Our international business was probably the fastest growing aspect of our business, up 91%. But we have very strong growth across our national retailers, across our digital business, across color cosmetics, skincare. So I think that's a great news about e.l.f. It's been a consistent growth story across every one of our channels.
We're in an election year, some focus on what that could yield in terms of policies. Tariffs is certainly something that's been in focus. How are you planning for 2025? And if we were to see something like that come to fruition again, do you have room to take price?
Well, our brand certainly has pricing power. There's only 2 times in our entire 20-year history we've taken pricing. One was in 2019 in response to 25% tariffs. The other was in 2022 in response to the inflationary pressures every company's facing. So we would use a similar approach going forward. If there were big tariffs, we'd use a combination of pricing, FX help, supplier concessions, and further diversification. So I feel given the strength of our value proposition, we have been able to weather almost any external force, whether it be the pandemic, inflationary pressures, you name it. We've been able to post consistent growth regardless of the environment.
Okay. Bottom line, it sounds like consumers are still spending on beauty, at least on e.l.f. beauty products.
That's right. We've read that consumers are being choosy. And I would say they're choosing e.l.f. And you can clearly see that in our market share growth as well as our strong top line.